Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Charles Moon, a senior market strategist at Equities Prosper Trading Academy. It is great to see both of you. Charles, before we get into your trades, I'm curious to know your big picture take on this market. It feels like this reminds me of that phrase, the trend is your friend, as we continue to see this grind higher on the S&P 500. What's your thought?
Yeah, that's exactly it. It's a low volume, kind of chop up market. The only thing that's kind of been shaking things up is, tweets from the White House, tariff news, et cetera. But otherwise, it seems like the market is fully comfortable being in this position, expecting deals to get done. It is summertime trading, so that explains a lot of the low volume melt up here. But, I haven't seen market conditions like this in quite some time. It really reminds me of the breakup in late 2019, right before COVID into 2020, where the S&P 500 went on this really ridiculous run of really small ranges, but actively just pushing towards, new highs on almost on a daily basis for nearly 3.5 weeks straight. So, we're just in this really very bullish environment. That's what this really signals. There's no cause of concern. There's not much demand, but, it seems that the bears aren't really trying to make a stance and get in the way of the bulls at this moment.
Yeah, potentially on track for a 5th day in a row of records for the S&P 500. Let's talk about your first trade on your list today. It's Okta. It's been an outperformer compared to the S&P 500 year to date. Where do you go from here with this?
Yeah, Okta's, it's had a pretty big pullback here since their last earnings report, but they've been in a really nice state of recovery. They got back above the 200-day moving average, and really what was notable yesterday was some really active buyers coming in. It broke through some of the short-term moving averages. So I was looking for an entry right around 96 today. It pretty much bounced right off of that level, almost directly on that price. I was a little worried about this $100 price. It's always a psychological level to watch, but it's been a bit of a hood in the last month where it's been a big price suppression range. They broke through this level. They're above it. Right now, it looks like the target is going to be around 103. And if it gets above 103, there's a lot of space opening up to around 107, 108. This is one of the names I want to keep an eye on in the short term because they got some great upside to recover. And, being in this environment, there's not too many stocks that are providing this type of opportunity here.
Okay. All right. Rick, take us through what you noticed about the patterns in the chart for Okta.
Yeah, some compelling price activity here. And to help provide some visuals to some of the things Charles was saying here, just to kind of back up, you can see that gradually we've seen higher and higher lows in this name here. So not exactly a horizontal line, but still roughly around 88 or so, 80, 86, maybe around that general regions where we kept hitting our low points here. But more recently, you could draw this shorter term white trend line going across the highs in our price activity. Here's the breakout point where we pushed above that trend line, as well as the confluence of our 21-day exponential moving average and our long-term 252-day exponential moving average in yellow and purple, respectively. That's right around that 95, 96 level that Charles was discussing here. Now we can see that price has approached that level 100, 102 or so. That represents the lows from this area. We can see that for now, price is also holding on above our medium-term 63-day exponential moving average that comes in just below 101. So that could be an important foothold to watch as we head into the close of this week here. That 107 level represents about those old highs from right there. But one further level to consider, around 112. That's where we had our high point after the gap down on earnings here. Very heavy volume, very a notable day for trading activity as well. If we were to also consider our volume profile point of control and standard deviation channel studies, we can see that now price is pushing above a very heavy volume node near 98 to 100 or so. This will be another crucial area to hold. We can also see there's a bit of a strange spike right here, right around that 105 level. So that could be another area to have your eyes on in the shorter term.
Okay, so that's an area to have your eye on in the shorter term. But Charles, I want to go back to your thought that you said about the $100 level, that being a psychological level. Is that just that round number and a potential for resistance there?
Yeah, absolutely. If you actually look at the books, you can see a lot of the liquidity especially around stocks when they get around these round levels, really start to swell up. And it's always been a human, instinct or nature that there's attraction to these levels, either as profit taking or to short or to look for breakouts. And that's really, really key in my opinion. And, we saw it today. There was a high volume breakout at that moment. It didn't spike too crazy, but it definitely spiked and carried this momentum. Right now, still trading at or near these highs. So, you could kind of see the development of where we could see a potential sentiment change as well with this stock if they remain above this $100 price.
All right, let's talk about the next name on your list. That's Eli Lilly. You're not the first one to bring this as looking at the potential here. Mish Schneider at Market Gauge also pays attention to this one, has been paying attention to this one. She calls it the vanity trade. And you say this isn't a stock you usually trade. What makes it interesting now?
Well, respectfully, it's this technical breakout. This 200-day moving average has been a pretty big suppression zone since they've fallen underneath it off of their last earnings report. So dating back on May 1st, they basically opened right at that level. They got shot down. They broke down towards around $700, $710, and they've been recovering since. On that initial rebound, they came up to the 200-day moving average and got knocked back down. So getting above this level is a major achievement because this has been the first time since their last earnings report they've been effectively able to peak their head above the water. Now, the question is, can they keep their head above water? So that's what I'm looking for right now. I'm looking for buyers to kind of jump in right around this 805, 806 price. And then we need to break through effectively right around this 825 price. Breaking above this 825 price is going to be crucial because, in my opinion, this and that gap bar high off of earnings, which is right around 850, is the only thing that's standing in a way of filling this gap, which was the closing price of 897. And so now we got to look at this as a long-term play along with the short-term play. Short-term play, if it holds here, quick bounce to 825, that could be just an easy money maker. But once we start effectively pushing, once we get above this 825, it's really signaling to the market that this stock is really trying to drive, and they have a very transparent target at that gap fill level. And this is what traders and investors look for: great profit pocket opportunities to really see this stock glide up here. They're a leader in their field without a shadow of a doubt. So in my opinion, this is something that's going to be on watch in the very near term.
Can they keep their head above water? That stands out to me. Or will there potentially be a shock that could potentially take it down? All right, Rick, what do you notice about this chart?
Yes, and the round numbers, like the psychological factors that we were talking about, technical analysis usually discourages arbitrarily assigning significance to those. I can't help but notice how often they come into prominence, though. I mean, right here, more recently, this was our range here, 800. That was the high point. I think you find oftentimes that despite the caution to not just assume these levels are important, they often do turn out to be that way here. Nevertheless, we can see that for the most part, price was traveling within a range between about 800 to 760 or so recently. Our moving averages, these are exponential moving averages, 21, 63, 252 day, clustered together, moving extremely sideways in a very narrow grouping here. So typically that speaks to one of two things. Either the price action has been too choppy for the moving averages to solidify in one direction, or the range-bound trading has just kind of slowed their progress to a crawl. Actually, it seems like kind of a mix of both. We had these big swings here, the low point, then the high point. This is what Charles was referring to earlier, that level around 900 where we had the big gap downward. And then we've kind of just moved sideways as well. So a symmetrical triangle type shape to consider in the shorter term. A longer term overall downtrend, though, starting with those 52-week highs here. Nevertheless, breaking out above that 800 level, we could see a potential retest of our old trend line. A common situation when a breakout happens is after the initial push, the stock retreats, retests support, and then continues on in the direction of the trend. Not saying that's going to happen, just that it's a very common situation for traders look out for. We can see the bulk of the volume on our chart here is in a very large range, 770 or to 820 or so. The point of control lines up pretty closely with our cluster of moving averages. So a break below like 790, 786 would be notable. That would be a downside area to watch. Then we have our our gap levels. 850 is where the highs came in after the gap down, and then around 900 was that high point that we were discussing earlier.
All right, Charles, any final thoughts on Eli Lilly before we move on to your last trade today?
Yeah, and I agree with them. The progressive ranges have gotten tighter and tighter, and usually what that indicates is that energy is being harnessed up in relation to that actual technical breakout. So, he's spot on about that descending trend line up, but there's that strong descending trend line to the upside off of these lows. And the last time this actually happened was before their last earnings report, just after the start of this calendar year in 2025, where it held right around the $700 price and shot straight up to 920 on that technical breakout. So it's setting up for something very similar to happen. It just needs to start breaking, and really that initial 825 price could be a really huge catalyst to the upside.
All right, let's talk about the last trade on your list. Autodesk is on your list. Tell us about this one.
Yeah, so, obviously ADSK was performing great, and it looked like it was actually ready to start making a huge move, basically breaking out from right around 317 to go ahead and test their 52-week highs at 326s. And then news came out, cratered this stock down to around $280. Well, they've quickly recovered here. Similar to Okta, they got back above the 200-day moving average, used this so far as a stepping stone to the upside. Now, they've also gotten back above these shorter term EMAs and along the 50 SMA. And, when I see support pretty much moving lockstep with the stock, usually indicates that demand is starting to pick up in this name. So what was really critical is that the last 2 days they've gotten shut down right around 302.5. They broke through that level today. That's what I was looking for. There's a small gap fill that we're looking at right around this 307.27 price. But I actually don't think that buyers are going to be looking to secure profits at that level. Maybe the short-term traders, but I have a feeling that, ADSK is trying to swoop up and go right back to those 317 levels and perhaps start pushing for that, key 52-week high. This entire sector, along with cybersecurity and semiconductors, have been the leaders this year. We've seen a lot of the Mag 7 names really underperforming in relation to a lot of these names. And so I really like the growth opportunity, short-term and long-term, in this stock. I'm looking for some upside propelling here in the near term.
Okay, Rick, take us through what you notice about this chart.
Yes, 317 is the very level that I highlighted here because it was our gap point here, highs, and then highs once again. That would be the obvious breakout point many traders would be looking for to give some downside levels. 293, a repeated floor here during this very tight range-bound activity. 282 as well was another notable downside area to watch. We can also see, if we were to quickly assess our volume profile study, we are pushing above the point of control near 296, as well as several of our technical indicators here. So it would be key for this bullish breakout to hold and take out that 317 level.
All right. That's our Rick Ducat, lead market technician, and Charles Moon, Prosper Trading Academy. Thank you guys so much for the trades for today, this Friday. Have a great week.